So my guess is that you won't see a new cycle high this month. If we fail to hold the 20-week SMA as support, the obvious next stop would be it's actually last two Septembers were in fact green. So September does not have to be red, but I think the more likely way to get a rally into a market cycle top in Q4 would be for Bitcoin to not go below 95K. Because again, like if you go below that level on a couple of weekly closes, then it might actually call into question the integrity of the bull market. Because I mean, all cycles ended after 2 weekly closes below that. As long as Bitcoin is staying above that, then there's reason to be optimistic. And that level right now is about...
Benjamin Cowen is the brain behind Into the Cryptoverse, where data meets crypto. With a PhD in nuclear engineering and a sharp eye for market trends,
he's built a loyal following by breaking down complex financial data into clear, actionable insights, especially on his YouTube channel.
I mean, midterm years historically are the weakest years for risk assets, but that doesn't mean one of the things you can do in midterm years is at least consolidate your portfolio, your crypto portfolio, to the only Bitcoin. Because eventually, I think the Fed will learn that, they can't just, we can't just cut rates to solve all our problems. And the issue that I could see happening is, the thing to remember is that until initial claim and that sort of stuff really starts to give scary numbers, like 300K, I think the best thing to do is to fade that.
Hey guys, welcome back to Less Noise, More Signal. Today we have brought Ben back onto the show. It's great to have you with us, Ben.
Thanks for having me. Pleasure to be here again.
Yes. You've been one of the most requested guys to come on the show, so it's amazing that you're back. And I think we just get stuck in right away. I mean, bulls and bears are currently fighting it out at the bull market support band, something you've called for in your videos over on your channels. So the question on everybody's mind is probably who will win. Any insights into that?
It's a good question. I think that if we fail to hold the 20-week SMA as support, the obvious next stop would be about 10% lower at the 50-week. The 50, I guess I can share my screen. So, I mean, the 20-week SMA and the 21-week EMA in prior bull markets were pretty good support levels. Like if you look at like 2017, you'll see that this is kind of where Bitcoin just found support over and over and over again. That 20-week SMA, 21-week EMA, and it essentially found support the entire way through the bull market. And you could argue that the most obvious comparison to September of 2025 might be September of 2017, where Bitcoin went down to its 20-week SMA in September of that year. There's also an example in 2020 after a Q1 capitulation where Bitcoin was right at that 20-week moving average in the month of September, but it didn't really go anywhere, right? It held it as support, but we didn't see any new cycle highs in the month of September. So my guess is that you won't see a new cycle high this month. I think you will likely set a low this month. And I think the low will either be here, the more optimistic case, or could be a little bit lower at the 50-week. Because this cycle, Bitcoin has been more so checking in with a 50-week moving average, before gearing up for another leg higher. So it's not impossible for it to drop below the 20-week moving average, but my expectation is that a low is set sometime in the month of September.
Yes, I see. Is there any way we can assess, like, obviously this is also reading the tea leaves here, but like you said, this cycle, it's been more likely, or it used to sort of visit the 50-week EMA but like, is there any reason why it could hold this time around and not do this, or like, just stay with the 20 days, so to say?
The 20-week, yeah, like it's certainly possible. Yeah, it's possible that Bitcoin kind of does what it did here in 2020, right? Where it has this capitulation. It's actually a really similar setup. You sort of have your Q1 capitulation, and then you get close to testing the 21-week EMA in the summer, and then you don't, and then you kind of go up, and then you come back down to it. So it's completely possible that's what's happening. But in the case where that happens, let's just say that Bitcoin holds support at it before going into potentially the market cycle top, then you would still likely see altcoins struggle because they're not going to be convinced yet that Bitcoin is going to hold it, right? And usually altcoins do well when Bitcoin is extended from the 20-week moving average, kind of like up in these ranges. That's where altcoins do really well. But when Bitcoin is at the 20-week moving average, falling down to it, that's where you start to see Bitcoin absorb some of that liquidity. So I would expect Bitcoin to absorb liquidity from the altcoin market to attempt to stay above the 20-week SMA. If there's not enough liquidity there, then again, the next stop is the 50-week. And I think you'll form a low, somewhere in that zone right there over the next few weeks.
What if you could lower your tax bill and stack Bitcoin at the same time? Well, by mining Bitcoin with Blockware, you can. New tax guidelines from the Big Beautiful Bill allow American miners to write off 100% of the cost of their mining hardware in a single tax year. That's right, a 100% write-off. If you have $100,000 in capital gains or income, you can purchase $100,000 worth of miners and offset it entirely. Blockware's mining as a service solution enables you to start mining Bitcoin right now without lifting a finger. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. You get to stack Bitcoin at a discount every single day, while also saving big time when tax season hits. Get started today by going to mining.blockwaresolutions.com/LNMS. Again, that's mining.blockwaresolutions.com/LNMS. Hey guys, I just wanted to let you know I published a new book, The Bitcoin Enlightenment, co-written with my buddy Daniel and none other than Mexican billionaire Ricardo Salinas. It's a deep dive into the monetary system and its future. In it, we make the type of connections that go beyond what you'll hear from your average Bitcoiner, MMT advocate, or macro pundit. So grab your copy on Amazon today. You'll find the link in the show notes. And now on to today's show. Yes, that makes sense. I mean, one thing that I'm curious is because a lot of people are talking about this September seasonality, for Bitcoin, but then I guess also for broader markets, we've seen it with equities as well, that September is usually like a weaker month, historically speaking. And the question for me is like, usually when everyone, again, believes that we're headed lower because September is like a weak month, I'm sort of also wondering, okay, will the market give us this opportunity in that sense, because, or you have a different view? To me, it feels like everyone is sort of set for this now, in September, we're going lower. Okay, we're meeting maybe this 95, 90K even, and then everyone wants to jump back in. And then usually if that's the case, probably we're not revisiting these levels just because to leave some like market participants sidelined and all off.
Yeah,
So to
I
say.
would be concerned if Bitcoin went back to 90K this late in the cycle, because if it does, it probably means the cycle's over and we won't be returning to a new all-time high. So historically, all the prior cycles were over after Bitcoin got like 2 weekly closes below the 50-week moving average. You can see in 2021, in 2017, and of course in 2013. So the 50-week moving average is already at like 95, almost 96K. So if Bitcoin closes, multiple weekly closes below 95K, I would actually then flip the view and then say, it might bounce, but that it's more likely that the cycle top is in at that point. So, that's one of those things where, if you get I think a lot of people want a deeper correction because then they want to be able to buy and then hopefully ride it up into a market cycle top. But the more likely way to get a rally into a market cycle top in Q4 would be for Bitcoin to not go below 95K. Because again, like if you go below that level on a couple of weekly closes, then it might actually call into question the integrity of the bull market, and that might spook a lot of people. And then you have a chance where August was the top. So I think that, if you look at monthly returns for Bitcoin, We're now, I think, 3 years in a row where maybe even 4 years in a row where I think August was red. Yeah. So every August, 2022 through 2025 has been red. And only one of those Septembers was red, right? Actually, last two Septembers were in fact green. So September does not have to be red, but I think a low will form in September. Just like August was red, even though Bitcoin put in an all-time high, right? Like technically Bitcoin did put in a new all-time high in August, even though the month was red. I think that September you'll have a low, and then the month it could turn out being green, right? I don't know for sure. I mean, it depends on if we hold the 20 week. If we don't hold the 20 week, I'm gonna go to the 50, then it's very likely going to be a red month. But you can already see Bitcoin already set a new low this month compared to last month. So that's kind of like best case scenario that the low is in on the first day of September, right? Like everyone gets super bearish, and then that just ends up being it. And so I would argue that regardless, if we do hold the 20-week SMA, I think you're likely going to see it hang around kind of like 2020 or I don't think you're going again. I don't think you're going to get a new cycle high in September. September could be a great month, but I don't think you're going to see a new cycle high. I think if we get that, you're going to have to wait for until October.
Mm-hmm. Yeah, I was just going to ask because this is something that Bitcoin has done in this cycle over and over again, like even for longer extended periods where it had these sort of chop solidation, where it was just consolidating. So what's the likelihood of Bitcoin now? The bulls are actually holding the bull market support band, but then it's just not going to go anywhere for the rest of September and people just going to get bored, or maybe even that sort of scares people like, oh, we've held the support, but we never really know, is it going to break down, wick down below at some point? I guess that could also be a realistic scenario, right? Where it just chops around for the rest of September, so to say.
Yeah, that's completely possible. I do think it will not be a good month for altcoins. Bitcoin could be okay. I think altcoins are going to keep bleeding back to Bitcoin. Historically, this is the sort of Bitcoin dominance seasonality, September, October. So I think Bitcoin is a better hold right now than most everything else in crypto. We just saw a really great rally by Ethereum, but I think Ethereum is going to cool off for the next 2 months and not really go anywhere until maybe a little bit later on in October or even early November. I think that, I think that Bitcoin is going, as I said earlier, I think Bitcoin will use altcoins to try and stay above the 20-week SMA, right? And if there's not enough liquidity, it'll try to use that liquidity to stay above the 50-week moving average. The problem for alts right now is that we're likely entering into the final rotation into Bitcoin for this market cycle where Bitcoin dominance goes back up. And that's why I would sort of caution people about putting too much interest into altcoins. And I think, Bitcoin is a better play. Look at 2020, right? Or sorry, 2017, right around the same time, Bitcoin dominance bottomed out in this time period, right? In September. And then it went up into, sort of into the end of the year. If you look at 2020 September, which we just looked at, Bitcoin dominance bottomed out at this exact same level and then basically rallied into the end of the year. So I think that as an investor, unfortunately, no one has a crystal ball. But if you're going to take on risk in crypto, I think you're better suited holding Bitcoin for the next 2 months than most every other cryptocurrency.
Mm-hmm. Yes, I see. And if we zoom out of crypto, even like what about gold? Because I think we've seen recently like this gold Bitcoin divergence, and many people argue that maybe now it's gold's turn again, for the foreseeable like few weeks. And then obviously gold always runs first and then Bitcoin will follow. Is there any merit to this claim? And how do you think about this gold Bitcoin divergence that we're seeing currently in the market?
Yeah, we saw a similar setup back in 2024, where gold was trying to break out and then it finally did break out. And what's interesting is when it broke out, that ended up marking a low for Bitcoin USD because Bitcoin USD found a low right around that time frame, like August of 2024. So I could see Bitcoin forming a low right around the same time that gold breaks out to new all-time highs, right? And I do think that gold is going to break out to new all-time highs. I think gold looks incredibly bullish. It has for a while. So I think you're going to see another rally by gold into the end of the year. And then next year, I think you'll see probably about a 15 to 20% correction by gold. But, that correction, depending on how high gold goes, like I don't know how high it'll go, but if let's say it were to go to 4K or something, a 15% correction might just get you back down to the current prices, right? I don't really think we're going to see, a drop in gold back to like 2000 or anything like that. Not at any point anytime soon. I would stay bullish on gold for now. Maybe after gold breaks out and is breaking out for a few weeks, and then you might see Bitcoin follow. But right now, it's more of the commodity side of things. Also, silver looks good. You could make the argument that palladium looks good, that platinum looks good. A lot of the commodities are starting to run right now, and I think you're going to see another asset class. I think you will see the S&P drop. If you look at a lot of historical moves by the S&P, even in 2021, the S&P 500 dropped to the 21-week EMA in September-October timeframe. So I think you'll see the S&P 500 drop into the 20-week SMA kind of over the next like 4 to 6 weeks. But then there's a good chance it would then bounce off of that level and then, continue to go up a little bit later on in Q4. So if you're looking at like the S&P, I'd maybe assume something like this back down here by like late September, early October, and then probably a bounce from, sometime in October.
Mm. And given like S&P will be traded in the new year as well, like you said something about gold having this potential 20% correction. How would that look for the S&P then as well, and what are you basing these corrections on? Is it purely like technicals that you're looking at, or is this sort of coinciding with the macro framework that you have, or how do you think about this?
One of the things I look at is the S&P 500 divided by the money supply, and it's just been honestly, it's been a carbon copy of like 1996, this entire move. I don't really expect it to continue to play out forever, but it's worked out so far, including this like 20% drop right here. So, just kind of overlay what they went through back then, starting in 1996, right here, you can even see that low in 96 corresponds to the same low we had in 2022. So if you take a bar pattern here from the low to the high, and then you just kind of overlay it to this cycle, you can see it's almost a carbon copy match of it, including the 20% drop we had in April, right? Like this correction here looks the same, right? And then this 20% drop correction looks the same. So I think the argument right now is that, we're kind of in this larger distribution phase up here, but that can last for a while, right? I think you're going to find a high probably for the S&P in December, and then you'll probably get at least a 10% correction going into early 2026. But that still doesn't mean that it has to be, the big one, as they say, right? Like it could still hold on for longer before things might start to unravel. Ultimately, I think that the business cycle will end and will go to much lower rates, but there's going to be a lot of fighting between now and then, right? I think eventually, you'll see lower rates, but in the short term, I think there's going to be some other factors that are at play. I think that, Jerome Powell will probably be relieved of, chair of the Federal Reserve in 2026. I think they're going to lower rates, and that'll keep the market elevated, potentially a little bit longer, to kind of give you that sort of that last move or whatever. But then eventually, I think the Fed will learn that, they can't just, we can't just cut rates to solve all our problem. And the issue that I could see happening is I could see the long end of the yield curve going higher. So like if you look at yields, the only solution for high yields is high yields, and I think, a lot of those times where the long end tops out, it's sweeping a prior high. So I think that, the 10-year yield is going to rally after we get a rate cut, right? And I think it's going to rally back up to like 5%. You can even see last year when the Fed cut rates in September 2024, that's when the 10-year yield really started to rally. So what I think is going to happen, I think the Fed's going to cut rate, the long end's going to go up. And that's going to be responsible for the drop in the S&P 500 back to the 21-week EMA. It's going to be because yields are going to go higher. and that's going to be short-term bearish. But then I think you'll see a rebound by the S&P after that drop going into Q4, and you might even start to see short-term rates come back down as the Fed potentially prices in another rate cut. But the problem, and I think the reason why in 2026 we're going to get a drop in early 2026 is because I think it's going to become apparent that the Fed cannot continue to cut rate as aggressively, because I think we're going to see some of that upstream inflation that we just saw with the PPI numbers a few weeks ago. That's probably going to make its way to downstream inflation, CPI. And I think that's going to keep the Fed from cutting. It'll likely lead to some lower stock, maybe a 10% drop in the stock market. Could still see the stock market holding on for a little while because they're probably going to replace Powell and put in someone a lot more dovish. But eventually, as I say, like the rooster is going to come home to roost. But again, I mean, that could still be 2 years away, right? Like, I mean, it's a very long process. And ultimately, I think the sort of the oh crap moment is going to happen when the unemployment rate starts to go up at the same time that inflation gets kind of like a bounce or something, and then the markets can be like, oh crap, like we can't get lower rates because inflation's going up, but we need the Fed to come to our rescue because the unemployment rate's going up. Again, I don't think we've reached that phase of the cycle yet. Initial claims are still really, really low. The unemployment rate in summer of 2025 was the same as it was in the summer of 2024. But, by the summer of 2026 and later, you have to start to wonder at what point is all this lower hiring and all this other stuff. At some point, it's going to have an effect, even though I don't think it's going to have an effect just yet.
Yeah, that's interesting. I mean, some people are arguing what they're bringing in as a counterfactual as well as a counter argument is really, 2026 is also going to be the year of a midterm in the US, and potentially Trump will want to have the entire market like being fired up on all cylinders, and going into November again. So wouldn't that be sort of a factor that could still choose out this lemon even more, some of the juice, squeeze out some of the juice that's left in that lemon, or how do you think about this? Because this also goes into the entire fiscal dominance discussion. It's really like currently the administration, the treasury, that's trying to steer the market as well and keep it up with huge deficits and stuff. So are you factoring this in at all in your analysis?
I mean, midterm years historically are the weakest years for risk assets, but that doesn't mean they're not going to do everything they can to try to keep prices elevated, even amid sort of a weak backdrop. I think that Trump will probably replace Powell in 2026, and he'll probably replace them with someone to lower rates, and that will probably limit some of the downside on the S&P 500. I could actually let me share my screen again right here just to kind of show people what I'm talking about. If you look at year-to-date ROI of we want to look at the S&P 500. So here's the S&P. If we look at year-to-date ROI, just takes a moment to look. But and then we average out. Let's just average out all. We'll look at election years, post-election years, pre-election years, right, and then midterm years, right. So historically, midterm years give the worst returns, and the low tends to form around the August to October timeframe. And it kind of goes up into the election, right into the midterms. So I think that's probably what's going to happen, where you get a drop in 2026, but it doesn't have to be like a 50% drop, right? Like it might just be like a 10% drop, maybe 15 to 20%. I also think that them lowering rates will likely have some positive effect. But again, that's still a year away, right? I think it's going to be a long process where they're going to lower rates a little bit more this year. Long and the yield curve will go up. It'll lead to a sell-off in September by the S&P. And then in October, the markets will likely bounce as we've kind of got away from the, people won't care as much about the high rates again. Markets probably bounce. Next year, Bitcoin gets a pretty typical bear market year. Like it normally does in midterm years. The S&P could drop a little bit, and then we continue to go on as we've always gone on. That's how I view things right now. I do think Ethereum will likely get a big drop over the next 4 to 6 weeks back to the 21-week EMA. And then at that point, I would expect it to rally to all-time highs again. But I mean, there's a lot of moving parts here. I think the thing to remember is that, until initial claims and that sort of stuff really starts to give scary numbers, like 300K, like, I think the best thing to do is to fade that until it shows you that that's what's happening. Because again, like, no one actually knows when that stuff's when it's actually going to happen. The thing to do is just, remember that, buy assets that you believe in long term and hope for the best.
Yes, for sure. No, coming back to the here and now, and let's assume like this is not going to roll over like the entire market for now. And if you are a trader, and you're expecting sort of, okay, we could see some potential Q4 rally with risk assets, including crypto assets, then what if you are a trader who took sort of some chips off the table now in August, and is currently watching from the sideline? When is it the best time to redeploy this capital in your view? Is it really waiting for the September low, which is coming for Bitcoin? And then also, would it be like Bitcoin that you're loading up, or would it be Ether as you mentioned? Or is this something that you could even play first, go into Bitcoin, then again do the Ether trade, the rotation? Like, how would you think about this if you are a trader that's still sort of sidelined?
If you're a trader, I would stay away from altcoins for a little bit, mainly because they're going to bleed against Bitcoin, right? So I would get some Bitcoin in September, and hope that it just bounces to new all-time highs in Q4. I would also pick up some stocks. I think the S&P is gonna bounce, but I think it needs to have like a 5% drop first. So like if you're, I mean, again, no one can really time the market, so it's kind of ridiculous for me to pretend like I can. But like if this were to play out kind of how it does on average, but remember, I mean, the law of average, just because it on average doesn't mean it's going to do it this year, but it also doesn't negate the fact that that's what it does on average. If you wanted to say based on what things happen on average, what would be the best thing to do? It would be to, move a lot of your crypto portfolio into Bitcoin for the next 2 months, September, October. And perhaps think about picking up some stocks, some index funds in about 4 to 6 weeks. I would stick with Bitcoin, a Bitcoin heavy crypto portfolio until about late October, early November is what I would say. And if at that point, if Bitcoin's putting in new all-time highs in late October, early November, if it's putting in new all-time highs, that will be the time to then rotate back to altcoins. But I don't think we're there right now, right? I think in order to get another time where altcoins are going to outperform Bitcoin has to go back up and put in new all-time highs. If Bitcoin does not go up and put in new all-time highs, we're not going to see another rally by all, more than likely. So right now, I think it's a time to sort of hunker down in Bitcoin for a couple of months. As far as your crypto portfolio goes, as far as stocks, I would look for a dip in about 4 to 6 weeks. As far as commodities, I think they're breaking out now. I don't think they're going to be waiting around, right? I think gold's going to go higher and silver's going to go higher. So probably, maybe you focus on commodities for a few weeks, get some Bitcoin in your crypto portfolio. Like if you've got a lot of alts, maybe consolidate to Bitcoin, rotate those back to altcoins in a couple of months, ride commodities, and then look for a low in the S&P in 4 to 6 weeks.
Yes, I see. And what about Ethereum? I mean, you mentioned it already, but what about Ethereum versus other alts as well, especially maybe Ethereum-based altcoins? I mean, Ether has already swept the prior all-time high, in August real quick. It was like 490 something,
Yeah.
but it doesn't feel like Ether has really entered price discovery yet. And so I think would it probably be best to, if you want to play some alts, you would go into Ether first, as you said, end of October, November, maybe, and then later on, even try to quickly rotate into altcoins like maybe even Solana, or is it Ether-based altcoins, or how do you think about this? Like it's even higher
Right.
risk, but potentially higher return. Yeah.
I don't think alt season is going to happen until after Ethereum makes durable all-time highs. And that was kind of the warning I put out a few weeks ago, which I thought Ethereum was going to go to all-time highs. But normally when you get a sweep of a high from 4 years ago, it's going to get rejected on the first attempt, right? Just because there's so many backholders from 2021, they're just gonna get out and look to cut their, to break even, right? Um, from here, my expectation for Ethereum is a pullback to the 21-week EMA by late September, followed by a bounce to new all-time highs after that. That's how I think it's going to play out. I think that um, I actually think that altcoins are likely going to rally against Ethereum for the next few weeks. And the main reason is because they've been bleeding against Ethereum since April. They dropped about 53%. This is total 3 minus USDT divided by ETH. So alts have been bleeding against Ethereum since April. But as I said, I think alts will rally against Ethereum after Ethereum makes all-time highs. Ethereum made all-time highs. I think we're going to see some type of mean reversion here by alt ETH pairs, followed by another drop. But in the short term, alts will likely go up against Ethereum. As Ethereum drops to the 21-week EMA, alts will likely bleed against Bitcoin. Okay, so they'll rally against ETH, they'll bleed against Bitcoin for the next month or two. Is how I think this is going to play out. And then after Bitcoin's sort of seasonality, favorable seasonality is over in late October, then you might get another push by the ETH Bitcoin valuation, right? Like, so ETH Bitcoin, I think you're going to see it fall back into the 21-week EMA by late October and then go up again into Q4. That's kind of how I think this is going to play out. And because of that, you're likely going to see, Bitcoin dominance go higher.
Mhm. Yes, and the ETH BTC chart, how much room in your view does it have to head higher, in Q4? I feel like there is some room left, right, for it to even have a new all-time high, so to say, or not an all-time high, but like a yearly high, so to say, when it comes to ETH BTC, right?
Yeah, I'm kind of looking at 053 as a level, as a kind of like a good target. That was the low in the summer of 2022 before the merge. I think that's going to be some pretty heavy resistance. Also, if you look at 2 cycles ago, if you look at like a fib level, that cycle, you can see that ETH Bitcoin rallied back up to the 0.5 fib. And then if you just repeat that process here, the 0.5 corresponds to the 2022 low, 0.053. So I think that the most likely outcome here is for ETH to rally against Bitcoin up to about the 0.053, but I don't think it's going to be straight up. I think it's probably going to go down first into late October, early November, and then get that move is how I think it'll play out.
Yes, I see. And last but not least, what about Sol? I mean, some people are charting it against Ether again and as well, and they're saying, okay, maybe Sol will be the third of these musketeers, that will have its run. How do you see Sol versus BTC, and then also maybe versus Ether? Is there
Yeah, I mean,
anything?
the Solana Bitcoin valuation looks really similar to the ETH Bitcoin valuation, just delayed, right? I mean, you could argue that this was sort of the first distribution phase by the ETH Bitcoin valuation, and then it got sort of a secondary distribution phase that was a lower high. I think that Sol Bitcoin is kind of doing the same thing, right? Like, here's your first distribution phase, and then now it's going up potentially into the sort of the second distribution phase, where it likely puts in a lower high compared to 2024, and then sort of goes down into 2026. That's what I think is going to happen. I could be wrong, but look, I mean, if you look at ETH Bitcoin market cap ratio, the thing to remember with the ETH Bitcoin market cap ratio is that you could argue that it's an oscillator, right, where it kind of goes down and then back up and then down and then back up, and then it just went down and now it's going back up. And by the way, when it was up here, like, no one wanted to believe that it was ever going to go back down here, right? Even though I tried my best to convince people. Now, if you look at Sol Bitcoin, it's the same thing, right? Like, it already went to the highs. It's probably going to eventually sort of fall back in, at least to these levels. But I mean, that doesn't mean it can't kind of go back up into this phase before it falls in. That's how I think it's probably going to play out.
Yes, I see. Okay. Well, one other thing that I like you to comment on is friends of mine and other people online, who get usually uber bullish once Bitcoin starts moving again. They're like, okay, this is going to be We're going to see prices with some alts, XRP to $8, Solana to $800, BNB to whatever dollars. And I feel like you had some of these charts that you were sharing around, the historical risk levels, where you were showing that if these alts, like these blue chip alts, how they're sometimes referred to, were to go up to these type of prices, it would just be way beyond any sort of risk level that they've ever reached historically. And maybe you can talk to these real quick, because I feel that's what a lot of people don't understand, especially like people who are just on social media and they're hearing like, okay, XRP to $8, it's possible, because Bitcoin has also rallied this much. So maybe if you could recalibrate some of that euphoria, that would be amazing as well.
Yeah, like if you look at XRP, it's always kind of topped out around that 0.9 to 1 risk level. And it's already gone to 0.8 to 0.9 risk. But to give you an idea, I would say that the best case scenario for XRP, assuming Bitcoin goes on a parabolic rally in Q4, best case scenario, as far as I see, is going to be like somewhere between $5 and $7, right? And I know that's going to hit people like a brick wall to hear that, especially if they're looking for a much higher XRP price. But people have to take into account market cap and whatnot. And I'm not trying to make the rules here. I'm just saying, look, based on what XRP has historically done, and assuming we have diminishing returns and whatnot, like that would be the price that would be the market cycle top, right? And if you go look at say Ethereum, Ethereum 0.8 risk is 6K, 0.9 risk is 8K. I mean, you're likely not going to see a $20,000 ETH this cycle, right? Like we're just not. Well, first of all, there's not enough time in the cycle at this point. If next year is a bear market year, which it historically is, right? There's just not enough time for it to rally there. I mean, if you have an absolute parabolic rally, right, anything is possible. But if we're already in September, Ethereum is likely going to be going to its 21-week EMA. It's probably going to take until late October, early November, best case scenario, for it to durably break all-time highs. It could always sweep 5K and then drop again. I think it's going to take a little while. And so I think whatever move you get, kind of if there's a move in the November, December timeframe, that's going to be it. I think, whatever that market cycle, whatever that top ends up being, I think that'll likely be it for the cycle. And I just don't think there's going to be enough time for it to rally to 20K. Could Ethereum go to 6K? Yeah. Could it go to 7? Yeah, it could. Could it go to 8? It's possible, right? It's possible. But also, by the time it gets to those prices, you have to put yourself in the shoes of the people that bought it at $1,300 in April. They're going to be sitting here in December potentially, and they might be up 5x over half a year. It's going to be hard not to want to sell. And I think that's kind of what's going to, sort of lead to a market cycle top, probably well below what people are thinking is going to happen. But it doesn't mean you can't make money. It just means you need to not be too greedy.
Yeah, that's a great point. At that point, if Ether were to go to these prices, I mean, there's just so much unrealized gains probably that are floating around in the market, so to say, because of all these people who maybe bought in April, like the real sophisticated traders. And also, I think I've just seen this graph shared recently, also the unstaking, which is currently happening with Ethereum as well. I mean, it's just up to the right. The queue that you're waiting for is about almost 20 days by now, which also shows there's a lot of demand for people to unstake and potentially realize some of that gains that they've made in Ether, so to say. So that's a great point as well. I mean, a similar thing is with people being obsessed about this market cycle top. You mentioned it as well, or it potentially ending just because historically has always ended like this. As you said it yourself, I mean, there is history and we can sort of take that as a sort of estimation, but in the end, it's probably not worth it to stick to any sort of price target or also any timeline where it's all over. You have to reassess day by day again. That's probably how you do it as well, and how sophisticated traders are doing it, right? Just take it step by step and reassess if something changes. And I guess if Bitcoin were to rally into the new year, then maybe we could convincingly say, okay, This is we have to reassess the bull market. Cycle theory is maybe broken for good, but until then we stick with it. But that's probably how it works. So,
Yeah, I mean, for me, I'll just stick with it until it's proven otherwise. I mean, but even in 2022 when we had a bear market, as long as you can weather the storm, like if you don't want to just sell all your Bitcoin in sort of hopes of a crash, you could one of the things you can do in midterm years is at least consolidate your portfolio, your crypto portfolio to be only Bitcoin. Because one thing that has always happened in midterm years as well is that altcoins tend to bleed against Bitcoin. So, I would argue that it could be sort of a two-pronged approach where maybe you keep some, you keep some Bitcoin in case it's not a 70% drawdown like all the other prior midterm years or worse, but also have some cash in case it is, right? And that way you're kind of, yeah. And by the way, in 2022, I mean, for even the people that converted their altcoins to Bitcoin, at the beginning of 2022, I mean, it certainly sucked for a while because Bitcoin dropped to 15K, but I mean, no one cares about that now, right? I mean, Bitcoin is at, over 100K, right? So like the same thing could happen in 2026 where, maybe Bitcoin drops, but as long as you're not going to panic sell the bottom, and you can, you have a long enough time horizon, then it shouldn't be that big of a deal. So I've also seen a lot of people that do sell. Like one thing I've seen a lot of people do in the past is they will sell, near the top with it, plus or minus 2 or 3 months, right? No one really times the top perfectly. But then they never buy back in is another issue. Is that like, if you sold it at like 60K in 2021, but then never bought back in, you would have just been potentially just better off not selling at all if you're not going to actually buy back in. So I would say if you do sell your Bitcoin in Q4 of this year, just kind of maybe set yourself a reminder in late 2026 to not forget to potentially get back in for the next bull market.
yeah.
Something to think about.
That's a good piece of advice as well. It's again, maybe then they're sort of complacent or they feel like, oh, I've nailed it, but then they're too scared again to because they actually want to hit the bottom and time it perfectly. So that's a great piece of advice as well. Just then try to you don't have to nail the bottom at the exact right timing. Just get in again. Otherwise, you're being left behind. That makes a ton of sense. I think one last thing that I would like to ask you is a lot of people are also pointing out the fact that none of these traditional topping metrics, have hit yet or have signaled sort of that it is a top. It's like the P cycle, top indicator, MBRV, Z score, rainbow chart, whatever you name it, in Bitcoin bubble index. Why is it, in your view, that so many of these top indicators have not signaled sort of a market top yet? And is this also a fool's errand for people to track this and feel like, okay, because it has not signaled, we're going higher ever more, like.
I mean, all models are wrong. Some are useful. At some point, all models break. One reason they maybe haven't signaled is because maybe the top's not in yet, right? I mean, that's kind of the easy answer. When you consider that all prior tops occurred in Q4 of the post-halving year, it would be concerning if a lot of them had already triggered, So if we're sitting here and it's December of 2025 and all of them are triggering, it'd be foolish to ignore it, Like it'd be so foolish to ignore it. But I guarantee you, if that happens in 3 or 4 months, like a lot of people are going to ignore it and just say this time is different. So I mean, the most obvious answer is they're not triggering because, there's a good chance we see higher prices. If we don't see higher prices and that's it, and the top is already in, I have to imagine it's because the recession finally happens. Like the recession that people have called for the last 4 years, finally actually happens. So that's why I monitor the macro data so much. From what I can see at this point, it doesn't really seem like that's we're not really seeing the unemployment rate trend higher right now. We're not seeing initial claims trend higher. It doesn't seem like it has to play out right now. Although I do think it will eventually play out. I mean, the end of every business cycle does eventually come when the unemployment rate really goes up a lot. And that's going to happen. I just hope it doesn't happen. I mean, hopefully it doesn't happen in the next 3 months, right? I mean, if it does, if that happens in the next 3 months, then I guess that's a way where none of the cycle indicators fire off, and then everyone just gets wrecked, because they're all waiting for something that's not going to happen. But what I would use to kind of combat that uncertainty for me, anyways, is I'm just as we started off the show, I would look for the 50-week SMA, right? Because I mean, all cycles ended after 2 weekly closes below that. As long as Bitcoin is staying above that, then there's reason to be optimistic. And that level right now is about 95, 96K. We stay above that, remain optimistic. Below that, then you got to start, and again, like if you get 2 or 3 weekly closes at like 90 something K, I would probably de-risk a little bit just in case that we're going into something bigger. But again, that hasn't happened yet, so still reason to be optimistic until the market proves otherwise.
Yes, I've seen. I mean, just my last question. You've pioneered this sort of applying modern portfolio theory to crypto assets. Maybe again, you talked about it already, but can you elaborate on how like a typical investor can practically use MPT, to optimize their crypto portfolio? And then also, as you said, maybe throughout the cycle, now that we're maybe late stage cycle, it makes sense to put some chips off the table, or any thoughts on this as well?
Yeah, I mean, so like right now, like the Sortino ratio, which maximizes your risk, you have the Sharp and the Sortino. I prefer the Sortino because it doesn't punish positive volatility. It calls for about 83% Bitcoin, 17% ETH. So basically around 80-20 is what it says. And I think Bitcoin will outperform Ethereum for about 2 more months, and then you'll probably see for the next 2 months, and you'll probably see ETH outperform Bitcoin for a couple of months, right? So I mean, if you want to trade those short term moves, you can, or if you just want to go like 80-20 and just be like, whatever, 1 month this one's going to do better, 1 month this one's going to do better. I'm not going to try to time everything and have to, send my accountant all these trades and have to pay capital gains taxes on everything. So I think you could use this, and basically you want to be on the efficient frontier. So if you add in a coin like Litecoin onto this, which is not a coin that I don't think anyone should be having in their portfolio. And again, I mean, it's not because I fundamentally dislike Litecoin. It's just because the data says that the market fundamentally dislikes it. If you add in Litecoin into this chart, you can see that to maximize your risk adjusted returns, it calls for a 0% Litecoin, right? And it's not that Litecoin can't go up. It could. It's just that if it goes up, it's going to still bleed against Bitcoin, right? If you look at the Litecoin Bitcoin valuation, for instance, it just keeps on bleeding, right? Like the last time I pulled this chart up, it was down 97%. Now it's down almost 97.5%, right? So over a long enough period of time, it just keeps on bleeding. So, there's something called opportunity cost, right? For every dollar you put into Litecoin, that's not a dollar in Bitcoin or Ethereum. And so, so what you want to do is you want to find a portfolio. You don't have to maximize your risk-adjusted returns. You could try to go higher up on the efficient frontier and go for higher returns, but you're doing so at the expense of higher risk, right? So you just want to make sure that if you're on the efficient or if you're going after a portfolio with, say, an expected annualized return of, say, like 70% or something, you want to be, or sorry, if you want to go for a portfolio that has a volatility of approximately, like, say, 85%, you want to make sure you're not down here where your annualized expected returns like 40%. You want to make sure you're up here where it's 70%. And every single one of these dots on this chart is a different portfolio composition. So you can see down here, it's higher percentage Litecoin, right? So like, it doesn't mean it can't go up. It just means, you're getting severely outperformed by both Bitcoin and Ethereum. And then the higher up you go, you'll notice the lower the Litecoin percentage goes. So you want to, you really want to be careful about that. And if, by the way, if you add in US dollars onto here, for those that are potentially curious about getting into some cash by 2026, if there is a bear market and you just want to hedge, it would suggest about 30% cash for that potential outcome. So that's what I would look at.
Yeah.
Constructing a portfolio.
Yeah, that's also very interesting. Thanks for these insights. If people want to gain access to these sorts of simulations and tools, how can they do so? Can you quickly summarize?
Yeah, I mean, into the cryptoverse.com, or I mean, I talk about it on my channel all the time. So you can always just subscribe to my channel, and I talk about this stuff on like a daily basis.
Yeah, that's true. No, that's great. And people love it. That's for sure. Well, Ben, I think that's about it. Thanks for this quick tour d'horizon through the crypto markets and risk assets in general. Enjoy the rest of your day. It was amazing, and hope to have you on the show sometime 2026, maybe again to reassess.
Thanks for having me.
Thanks. Have a good one.
You too.